good morning from our global headquarters in New York. I'm Menace Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
The great unveiling. NVIDIA aims to expand its dominance in robotics and autos after closing at another record high. Mounting tensions, Washington hits Beijing hard, blacklisting multiple firms across industries from tech to oil. And Mark Carney throws his hat into the ring in the race to succeed Canadian Prime Minister Justin Trudeau. Menace, some breaking news.
Danny, good morning. Yeah, we have breaking news. Euro area preliminary CPI comes in on the headline at 2.4%. The estimate out there was for 2.4%. On the core, I can tell you 2.7% year on year and plus 0.4%. Of course, the euro's had a blinding start. We were just looking at this before we came on to the 5 days in a row. We've had a rally in the euro up 0.7%. As much of that, Danny, is to do with the dollar shifting around. Equity markets is what we got for you. We're on this tariff roller coaster. 25 hours ago, we had this explosion higher in risk on the Washington Post story that we're going to have narrow tariffs. Trump walked it back, but we still eked out gains as we went to the close. Goldman Sachs still say that there are opportunities here in this market, short-term buying. Of course, we're dealing with the new list of blacklisting here in the United States of Tencent and CATL versus NVIDIA. Let's roll it over, have a look at the bond market. Danny, yields popping, and they were popping before the tariff headlines yesterday. 30s trading at a 14-month high. We come back to flat at 462 this morning. Are we in a secular rise in interest rates? Is a question that Jim Bianco asks.
Some other stocks we're keeping our eye on, or maybe the same stock that we're literally always keeping our eye on. NVIDIA, a new record high yesterday, and then it announced new chips, software, and services, trying to stay ahead in AI computing, in autos, in robots. That's up 1.3%, Menace.
Caravana jumping after RBC Capital Markets upgraded the stock to outperform from sector perform, saying that the used car retailer remains well positioned to achieve 25% plus growth in annual adjusted EBITDA.
And some more sell-side action for you. PepsiCo rising after Piper Sandler initiated coverage of the company, along with other soft drinks, including Coca-Cola, Dr. Pepper, with a recommendation of overweight.
And in just a few moments, we'll begin the conversations on these markets. Mads Pedersen of HumanEdge Investment Technology. A little bit later this hour, what to do with your stocks. Katrina Dudley of Franklin Templeton. Go for breath.
It's a difficult market to try to navigate. I think one of the more interesting things, Manus, and you pointed this out, even though you had Trump denying that Washington Post story that seemed to suggest that tariffs would only be towards critical goods, you still had dollar weakness and euro strength. Ozan Tarman of Deutsche Bank puts it really well, saying that it shows just how one-way and heavily positioned this market is, that you can have Trump walking things back and still people selling the dollar and putting on euro positioning.
And that dollar, it was like vertigo. It dropped by over 1%. The question is this: are you in a higher for longer scenario? Do you think that tariffs will last longer? And those are the two questions, I think, that really irked the market yesterday. It was an explosive hour for risk on. Equities drove higher. The dollar drove lower. Let's just take a look at the dollar over the past 2 days, because it really contextualizes everything. If it is a shift in policy, trade policy uncertainty. Danny, let's have a look at this. Trade policy uncertainty really ratcheted higher. A lot of that work was done in November time, back to the 2019 highs. Let's take this proposition to Mads Pedersen, our guest this morning, CIO, HumanEdge Investment Technology. So Mads, 25 hours ago, it was a reshuffling of the risk deck. When you look at that spike in uncertainty, in that trade uncertainty, and what happened yesterday morning, does it shake you in any way in your confidence to deploy new capital to risk markets at the start of this year?
Well, I think it confirms what we will have to live with Trump, which is that Trump sets the agenda, and this is a risky time to deploy capital. It's going to feel uncertain, but we're in a strong and very beautiful technology-driven growth boom. So you should deploy the capital, but you should not expect to get a year like last year or the year before. But there's still significant upside if the growth story is left in peace to unfold. It will not be left fully in peace. People will obviously make a name out of themselves speculating against what Trump will do. Trump will answer them back, put them back in place. And the special thing with Trump is he will also change his mind on the way. So you need to keep your focus on what you know, use your intelligence to find out where the world is, and navigate this uncertainty, but there's definitely more upside in markets from here. If you look at a horizon of 3 months, or if you look at a horizon of 24 months, there's definitely more upside.
The thing that's kept working, Mads, in this market is not just U.S. stocks, but is large cap. It is Mag 7. And you've seen this effort by the tech community, maybe to try to insulate themselves from the politics. Yesterday, we learned that Meta was adding the UFC's Dana White to their board, who is a Trump donor, who is a Trump supporter. Does that kind of political move, along with just the narrowness of breadth, mean that tech can continue to serve kind of as this oasis in moments of turbulence?
Well, it's one of the legs. I would broaden the scope a little bit on the hiring. Mr. Zuckerberg has proven to be a nimble and very smart operator, and Dana is not only a Trump supporter, he's also an entrepreneur who created well, it's not really a sport I follow a lot, to be honest, as a Danish, but it's an impressive business he has built. Yeah, he's an entrepreneur who's built it. So we will see that the leading people with the most resources in the world will be hiring the smartest advisors. That's clear. I think Marcus Aurelius did the same many years ago. So there's nothing new about that, and I think that trend will continue. I think we will see it in other companies as well. And we have, of course, already seen it in many of the technology companies. It will not insulate them fully, but the use of the technology and the widening pickup of the artificial intelligence and of the cloud computing will provide the revenues, which will make it affordable for them to expand their influence.
Mads, I love your phrase, a beautiful boom in technology. It's a question of whether it will be allowed to continue or interrupted. It could well be that the yield market, the longer end of the market, interrupts the beautiful boom that you have for technology. My question to you is this: do you feel that we are moving into some kind of a new secular rise in interest rates? We've had a number of notes hit the inbox, 5%, 5.5% from various people. Porrick Garvey over at ING talking about this momentum. What is the injurious level of bond yields for you to the growth, that beautiful boom in tech stocks?
Well, going to 5% from here, after we went from 2 to 5, is like a tiny detail. So maybe they should find a stronger story for such strong words. But I think 5.5 is where it starts becoming a problem, because then it starts really slowing the economy. And if we at the same time have that Musk actually does something about the spending, which what they don't talk so much about in the US is how much the actual fiscal spending has been stimulating the economy. So if you get yields going up at the same time as you have a clamp down on government spending, then we can get a recession. And then we have another beautiful trick, but that's going long the US 10-year or the 7-year. Yeah. So I think to 5%, we're fine. It's not a big move from here, and the economy is strong. You know, the US economy was supposed to slow last year. We didn't see much of a slowdown. And the drivers, the technology spending is there. And one of the men with the largest budget in the world was out yesterday and telling how he's going to expand his investments into new areas. So there's a lot of strong growth coming from profits being spent, which can, NVIDIA and Microsoft, they're going to spend independent of yields being 5 or 5.5. But of course, the marginal consumer is not. So that's probably at 5.5 the balance is.
Mads, this seems to be a global moment of turning away from duration. In the U.S., you had 30-year yields reaching their highest since November of 2023. In the U.K. today, it was the highest 30-year yields since 1998. Japan is somewhere around the highest since the 2010s. What do you make of this moment? The fact that it's not just the U.S. and the deficit concerns there, but it's a global disgust of duration.
I think we are all a little bit scared. If I use myself as an example, if you had asked me 6 months ago how long my duration would be now, and you compare it to what is my duration, in some of my portfolios, I have 100% equities, but in some portfolios, we, for various reasons, typically client restrictions, have maybe 70%. There, I would have thought I had longer duration. But given how erratic this central bank communication have been and the volatility that has put into the market, we just have to realize that we thought the central banks had come to a calm place, and then Powell goes out and make references which makes us think like he behaves a little bit like Biden, and the yields move around crazy, and it's just too risky to have long duration. I would have thought I had longer duration now than I have. I got it. I just have to correct my view because it's more dangerous.
Mads, I have a feeling we're going to continue to have these conversations in 2025. Always a pleasure to have you join us. Mads Pedersen of HumanEdge Investment Technology. Thanks for your time this morning. Let's get to some other top stories now that are trending on the terminal. A person familiar tells us that Bridgewater has dismissed 7% of its workforce in order to remain flexible when hiring talent. The cuts will affect about 90 employees. That means that the headcount is now back to where it was in 2023. Bridgewater will continue to hire selectively.
The International Longshoremen's Association and employers will meet today to negotiate a new labour contract with just over a week to work out the new deal. The main point of contention is the semi-automated cranes at the port terminals.
Fed Vice Chair for Supervision Michael Barr plans to step down from his role on February 28th unless a successor is confirmed. His departure raises questions about the future of the landmark bank capital proposal, which he was key in negotiating. Barr plans to continue to serve as a member of the Fed's Board of Governors.
Coming up, 10-cent dips, both in Hong Kong and here on the ADRs, as the U.S. added the Chinese tech company to the blacklist. More on the story in just a moment.
It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. The U.S. has taken the provocative step of blacklisting some of China's best-known companies, including Tencent and a major supplier of Tesla's battery, along with its biggest shipping line. Shares of Tencent were down 7 1/3% over the company's inclusion yesterday, on a U.S. Defense Department list for their purported ties to China's military.
Well, Tencent says in response that it's neither a Chinese military company nor a contributor to the Chinese defense industrial base. And although the sanctions have no impact on their businesses, they will nonetheless work with the Department of Defense to address any misunderstanding. Joining us now on this story is Rosalind Matheson. Ros, Tencent firmly denying the charge there. You've got to ask yourself, why now? I know this is a yearly list that comes out, and so therefore we should be prepared for it. But it is quite a contentious time. These are two very big companies, and Tencent has a swathe of holdings here in the United States of America, from music industry, Epic Games, Warner Music. So why now? Why these companies?
Well, it's interesting, as you say, this is a regular updated list, but a growing list from the Pentagon of companies that it's blacklisting. And it's a whole range of accusations, from direct ties to the military, direct ownership by the Chinese military or the government, or that they're simply somehow supporting the defense industrial complex in China between the private sector and the military. So it can really be a whole lot of different things that they're being accused of. And in this case, as you say, both companies say this is a mistake. They don't have any direct ties to the military or the government. But US officials point out that many Chinese companies are compelled to share information with Beijing, particularly when it's deemed to be relevant to national security. So it's very hard to escape some kind of broad, net here that they're casting from the Pentagon. As you say, this list keeps growing and it keeps getting bigger and bigger companies. There were other companies included again, but Tencent and CATL, two of the biggest ones. Tencent, as you say, fingers in many pies in the US and beyond. CATL is a real important part of the global supply chain for EV batteries for the auto sector, including Tesla in the US, including Ford, including many big European automakers. So it's interesting to see the timing of this. This doesn't mean that these companies get sanctioned, but it's really about saying to their buyers, for a better word, don't do business with these companies.
Well, the interesting thing with CATL specifically, Roz, was that they tried to build a factory in America, and it was shut down because of security concerns. Instead, they went to Spain and recently broke ground there. But that's the type of deal that it seems like Trump would want, to have these kinds of companies, foreign or otherwise, come in and under the tent of the U.S. and build there. How is Trump likely to handle some of these companies, ones, again, that have shown their willingness to come to the United States and to build and to hire?
Well, this is going to be the very interesting thing. As you say, the timing at the very tail end of the Biden administration and with Donald Trump, soon to be inaugurated for a second term. How does he react? Because generally he takes a hard line on China. Generally, he's threatening tariffs as a whole on the economy. But he may also listen to Elon Musk when it comes to CATL, in particular, given the link for Tesla when it comes to EV batteries. But also, he's been shown to shift his view. We all know that he was very anti-TikTok in his first term in government. Now he's requesting to delay a bill that would force the sale, potentially, of TikTok from its US parent. And now he's saying, well, I can probably do a deal here that would benefit all. So when it comes to China, it's not just a blanket move from Donald Trump. It could be very interesting to see how this plays out.
That is the understatement of the century. Roz, thank you so much for joining us. Roz Matheson. Some breaking news to bring you from Semaphore, reporting that Mickey Bowman is the top candidate to replace the Fed's Barr as the chair of bank supervision. This is the key line from the story, Manis. Initially appointed by Trump, Bowman was an executive at her family-owned community bank. And key here, her views closely align with the deregulation agenda that took several years into Trump's first term to begin implementing. So this would be a deregulatory pick, Manis. It is also one that just highlights that the chair, the supervision, because Barr is stepping down, needs to be from someone who's already serving as a governor of the Fed.
And look, this plays into the wider narrative in terms of where do you want to be deployed in terms of capital. KBW index ramped by over 2% yesterday on the news that Barr was stepping down. So this is about a sea change in terms of regulation, potentially in capital, and we can discuss that with Katrina Dudley in just a moment. Coming up, we're going to talk more about, yes, you got it, NVIDIA. It's what we do every day, but stay tuned because this is the latest moves by the chip giant. Context matters every day on Bloomberg.
We used GeForce to enable artificial intelligence, and now artificial intelligence is revolutionizing GeForce. Everyone, today we're announcing our next generation, the RTX Blackwell family.
That was NVIDIA CEO Jensen Huang on stage at the CES trade show in Las Vegas. The stock rising pre-market this morning after closing at yet another record high as Huang announced new chips, software, services aimed at keeping the AI darling at the top of the industry. How's he going to do that? Tom McKenzie has been tracking this story. We know that he's been monikered as the godfather of AI, but this is about stepping into robotics. It's about stepping into the auto industry, and it is about the evolution of what they're already doing, isn't it, Tom? Good morning.
Morning, Manis. It's about all of those things. This is about Jensen Huang. This is about NVIDIA spreading their bets. He talked a lot, of course, about sovereignty AI last year. In the speech at CES, it was packed. He was wearing that sparkly leather jacket, as you saw. He talked about the need and the opportunity around physical AI, and he released that chip as well. Not an AI accelerator chip, but a chip that's built on the Blackwell AI accelerator technology that will bolster your gaming if you're into that manner. So that's the GeForce announcement, but also the software component as well and the foundation model piece of the pie. It's a reminder that NVIDIA doesn't just do the chips, it does the software as well. It has the CUDA software that accompanies those AI accelerators. He also announced that they would be pushing out a foundation model that would assist programmers in developing and codifying their own models to help embed AI into robotics, into, for example, automated warehouses. Again, he talked about physical AI as being a multi-trillion-dollar opportunity. Bank of America says, though, they need to make sure that the costs are down in terms of the components to go into this, they have the efficiency, and that they can be pervasive enough to really create a new business line for NVIDIA. But absolutely, this is about a business putting out investments and bets across a number of different areas and platforms.
I also want to know whether his jacket was sparkly or whether it was just alligator skin. I'm looking at it, and this is obviously one of the most important signals for the company, so I'm deeply analyzing Tom. But you mentioned it. There we go. Actually, maybe it is sparkly. I'm not quite certain on that. Okay, let me talk about more important things, Tom. You can give me your take on his jacket. But the company was focused on, as you say, some of these software and chips that are specifically made for vehicles, and for robotics. But at NVIDIA's core, it is these hyperscalers trying to buy their specific AI chips. And that's the kind of growth that the market wants to see. Why not concentrate on that? Why broaden the gate, as it were?
I guess one argument NVIDIA could make is they already have, close to 90% of the market share of AI accelerators. Yes, AMD and others, the hyperscalers, their clients included, are trying to close that gap. But for most analysts, that is still a longer-term proposition in terms of narrowing the advantage that NVIDIA has. So for, I guess, from the CEO's perspective, as he stands there in that glittery, reflective jacket that would look maybe better on Manus Cranny, he's thinking about the future and embedding in other sectors. So yes, the autonomous driving proposition with Toyota is further down the line, Danny. Absolutely. You know, we've seen the challenges around getting autonomous vehicles onto our roads. You see them in Vegas, you see them in San Francisco, but broadly, you're still a long way from mass adoption. But that is a future play for Jensen Huang. And again, the robotics piece of this, he flagged numbers including 1.5 billion autonomous vehicles in the future, 1 billion humanoid robots, 10 million autonomous factories. That is the future that he is trying to position the company for.
Some big numbers. Tom, thank you very much. Bloomberg's Tom McKenzie. Coming up, we're going to catch up with Katrina Dudley of Franklin Templeton with opportunities in mid and small caps. From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
The great unveiling. NVIDIA aims to expand its dominance in robotics and autos after closing at yet another record high. Mounting tensions. Washington hits Beijing hard, blacklisting multiple firms across industries from tech to oil. And Mark Carney throws his hat in the race to succeed Canadian Prime Minister Justin Trudeau. Danny, good morning. 25 hours ago, we had a very different story to deal with on tariffs.
It was the whipsaw of Trump policy, but you can see the impact of that. Even Trump denying that Washington Post story that we would see tariffs across the board, yes, but only for specific industries. Trump refuted that, but still the euro is stronger today. It was yesterday. We're little changed on your yields, your 10-year yield at 4.6%. We get an auction today, $39 billion. 2 is 10s. That is the steepest since May of 2022. Equity markets, those are also a little bit weaker a little bit stronger this morning to unchanged after a good day yesterday. NVIDIA leading the charge, another record high. S&P 500 futures up 0.1%. Katrina Dudley has also been looking at this equity market, looking ahead to 2025, not looking ahead, we are in 2025, saying that we see opportunities in mid caps and small caps as earning growth expectations have broadened out, meaning the average stock is likely to outperform in 2025. The biggest risks are higher 10-year yields and earnings disappointments. Katrina, I'm pleased to say, joins us now, Senior Investment Strategist at Franklin Templeton. Katrina, so wonderful to see you. Happy New Year. I think we can still say that. We have seen, I know you see mid and small caps outperforming, but we've still seen so far this year tech being the thing that outperforms and general weakness in this equity market. What to you says that this is a trend that's just been bent and not broken?
So first of all, we are looking at earnings growth because that is the driver of all markets, is earnings growth. And the reason that we're positive on mid caps and small caps is that we see this earnings growth broadening out. And that broadening out of the earnings growth means that tech is going to continue to perform. They are actually going to be one of the highest growth sectors on a 2-year forward EPS basis. But we see all the other sectors are joining the party. I think the lowest forward growth rate is in the consumer staples sector, as you would expect, and that's a 14% growth rate over the next 2 years, compared with tech, which is going to grow over 40% over 2 years. So that's the breadth that we're talking about, that everyone is participating here in terms of growth.
Well, one thing that we saw yesterday, and we've just had a breaking news headline this morning, Michelle Bowman is the top candidate to replace Michael Barr. Banks had a blistering day yesterday. So when you see this kind of shift potentially to a more deregulatory framework within banking, the broad church of deregulation, that breadth that you want to go for, what portion does finance and banking play in the breadth grab?
I think financials are probably like on the bottom end of our earnings growth expectation as we were heading into the 2025 and looking at the forward rates. When you look at a deregulatory market, and I look at the costs that these banks and financial companies have had to bear in order to meet the regulatory burdens, I think that we're probably a little too conservative on our growth rates. So the financials are likely to promote themselves in terms of that stack of earnings. I think that there will be some more opportunities. It just reinforces that message. The second thing is that financials are not part of the Magnificent Seven. So going back to that average stock, you have a lot of average financials that will be able to perform in 2025 and 2026. They've got a good base in terms of growing earnings, and deregulation, lower costs as a result of that, is going to kind of supercharge those earnings.
And that's also part of the Trump animal spirits, as it were. But yesterday we got a taste of the other side of that coin, and that is policy pronouncements being done on Truth Social this time around, reports from the press being refuted, and this kind of piecemeal of policy as we try to figure out what the greater puzzle looks like. But amid all of that, amid the currency volatility and bond volatility, stocks were still higher yesterday. Is that a model for what this year is going to look like?
I think the resilience of the U.S. market has been surprising over 2024. And you look at some of the bad news that we digested over the course of the year, and the market still rallied significantly. So that's the positive side of all of this. The downside is that valuation. And a lot of people are saying, well, what do these headlines mean, given we're going into the year with a very hefty, high levels of valuation versus history? But valuation has never been a reason just to sell the market. If I look at those forward earnings growth numbers, they support a stronger valuation and higher valuation levels. We've got deregulation. That's another area which supports multiples. And finally, if we just look at those animal spirits, the network effect, everything else that's happening, we're positive. So I think that, yes, you may not have the kind of whipsaw, high rates of return that we've seen in the last few years, but I still think 2025 and even going into 2026, we've got room for the market to continue to move upwards.
So that's a nice bullish sort of foundation for the year. The one debate that has come to the fore is, and Mike Wilson, we chatted about this yesterday, this negative correlation between bond yields and equities. Mads Pedersen, I think, just sort of slammed the door closed. He said, stop panicking about 5%. We traveled from 2% to 5%. You're really only going to get spooked in these equity markets if you travel to something like 5.5%. Then you're talking about a growth slowdown. Where's the inflection point for you in your bullish call in regards to that narrative from the bond market, Katrina?
I would love to be able to put a point estimate to say this is the tipping point, that if the bond yields go over,
you can have a bandwidth rather than the tipping
exactly.
point.
So what the reason we're so focused on that is it's the impact on the federal budget and where does that go? And so that's what we're looking. Companies, yes, they're leveraged, but they've got long debt stacks. So I don't really think it's going to come through in the earnings picture if you see higher rates. So it's really coming in at the government level. And when do those federal deficits start to matter? And offsetting that, and we have to remember we've got a lot of good things going on. Not only are we talking about deregulation in financial markets, we're actually talking about efficiency improvements in our federal government. Now, federal government spending is not the biggest aspect, but that mantra and that way of thinking can actually offset some of these other pressures that we're going to see on the federal budget going
So
forward.
do you think that having Elon Musk and Vivek Ramaswamy come in is enough to kind of offset what's expected to be extension of Trump tax cuts, for example, that in and of itself means a growing deficit?
So in terms of the Trump tax cuts, he's already done most of the heavy lifting. He likes round numbers. And so I don't think you're likely to see a significant decline. He could probably cut rates, a few points, and we'll still be able to kind of, beat that victory drum that says, I cut rates. I think the other aspect that we're looking at is for more detail and granularity as it relates to his trade policy. policy. But if you take a look, from 2016 to 2000, when he was the former president, we did have a tariff regime that was implemented, and it was not negative for markets. And so I do question whether some of these tariffs, particularly as it relates to the tariffs on China, are going to be as inflationary as we fear, because China has gone at 2017, it was around 19% of our imports. It's now down to 10. So it's really lessened the impact and how those tariffs are going to impact us.
It's definitely structurally a different world, although the tariffs pay for about, $2.7 trillion worth of the tax cuts. So I think it's going to be about that balancing act in terms of how it's presented. And then we begin to understand, perhaps, the longevity of these tariffs. Katrina, thank you very much. A nice bullish foundation for the start of the year for Katrina Dudley of Franklin Templeton. Coming up with Danny and I, U.S. tensions escalate as Washington's blacklist for Chinese firms, it grows. More on the story. That's next on Bloomberg.
I intend to resign as party leader, as prime minister, after the party selects its next leader through a robust, nationwide, competitive process. Last night, I asked the president of the Liberal Party to begin that process.
Well, that race has begun with the former governor of the Bank of Canada, and the Bank of England, Mark Carney, saying he's considering running to succeed the Canadian Prime Minister Justin Trudeau. For more, let's bring in our Daybreak News editor, Mark Perrier, on the story. Mark, Mr. Carney has banking pedigree, ex-Goldman Sachs, global banker. He's never run for political office. I'm curious, how do you think Canadians will look at him given the current climate with the Liberals so far behind?
Well, this is all going to be very interesting. Carney, obviously well known on Bay Street, well known to Wall Street, well known in financial circles. But can he appeal to a wider Canadian voter audience? That will be the question. And he'll have very little time to do so. If he is selected as the party leader, becoming Canadian Prime Minister, there's very little time to prepare for the Canadian general election.
And it's not just domestic policy, it's foreign policy too, with Trump coming into the White House. Mark, what does all that mean for who the other potential contenders are, and just when we could expect a general election?
The general election will come by October. So Parliament will come back on March 24th. And they'll have to select a leader, hence a new prime minister, by then, and then go straight into election season. Obviously, with Trump coming in, looming tariffs, this is all going to play very greatly into the equation, not only fighting inflation in Canada. It's a big issue, obviously, south of the border, but you have a lot of political tensions as well, potential political tensions with the U.S. that will need to be worked on.
Yep, something the entire world is dealing with at this moment. Mark, so wonderful to have you on. Bloomberg's Mark Perrier. And just a reminder to our viewers that Mark Carney is the chair of Bloomberg's board of directors. Now, over in Washington, the Pentagon has added to their blacklist some of China's best-known companies, including Tencent and CATL, a major supplier of Tesla batteries. Shares of Tencent closed lower by 7 1/3% in the Hong Kong trade, and over a third, and over the company's inclusion Monday on a U.S. list for their purported ties to China's military.
Well, Tencent says in response that it's neither a Chinese military company nor a contributor to the Chinese defense and industrial base. And although the sanctions have no impact on their business, they will nonetheless work with the Department of Defense to address any misunderstanding. Quite a scalable misunderstanding to be on this list. Bloomberg Senior Editor for Tech and Strategy Industries, Mike Shepard, joins us. Mike, Tencent pushing back. What does this blacklist really mean for Tencent and CATL? Is it a message to the world about doing business with them? The New York Times has it done as a red letter kind of moment for Tencent. What's the impact?
It certainly is a mark on the companies, unlike the Commerce Department's entity list or listings, for example, by the Treasury Department under separate sanctions program. This listing does not carry any specific penalties, but it does have the effect of discouraging companies here in the U.S. from working with anybody who is on that list because it suggests a certain elevated amount of risk, as you could imagine. Now, in the past, companies have been able to appeal this designation, most notably Xiaomi, which said, hey, wait a minute, we do not have any sort of connection to or control under China's military. No fair, this is wrong, and they have been able to appeal through the Pentagon or even through the courts in the past. So this is something that will unfold. Now, keep in mind that if they are hoping to get maybe a more favorable hearing under President-elect Donald Trump once he takes office, keep in mind that this designation list from the Pentagon was actually ordained by then President Donald Trump in 2020. And the idea was to put a spotlight on companies from China that are controlled by the Chinese military, or at least have a connection to China's military in an economic sense. So it's not like they're going to get perhaps a more favorable view once the new administration comes in. And this is a big deal, as we noted, because these companies, CATL, which has also disputed the allegations, is not only a major battery supplier to Tesla, it's also to a number of other automakers. And it, too, has come into the crosshairs of policymakers here in Washington who are concerned that CATL somehow poses a security risk to the U.S. as well.
Yeah, but of course, if it's supplying Tesla, it's supplying the company of the first buddy of the United States. I mean, Shep, this does bring back where we started this week, and that was the deal for U.S. Steel and Nippon Steel officially being struck down by Biden under what has been said are national security concerns, something that the Japanese have even tried to push back on, that the companies are suing over. Anthony Blinken is in Japan for his last trip as secretary. Is there some sort of damage control going on? Is there any hope that this deal can survive, Shep?
Well, it is a difficult hurdle to clear in getting this deal through. And the Japanese certainly are trying to make their appeals, and the companies, as you noted, are suing, hoping to get the matter overturned in court. But again, the administration is about to change, and the incoming president has made clear that he too would block this transaction. So it's not like we are going to get an immediate change in the weather here in Washington as far as Nippon Steel's interest in U.S. Steel. Now, for Secretary Blinken, as he is making this visit, which was previously scheduled, this was a conversation that was certainly overshadowed by the U.S. against one of its closest allies, invoking national security concerns to reject a deal by one of its its own iconic and signature companies, Nippon Steel, attempting to make an investment here in the U.S. So it is certainly awkward. And Tony Blinken definitely had to face some tough questions, including from the Prime Minister, Shigeru Ishiba, who before their meeting indicated that he really wanted some explanation. So this is going to be a lasting issue between the two allies. It won't be insurmountable, but it is the kind of thing that will linger in conversations. The U.S. has tried to make clear that they welcome foreign investment, especially from Japan. It's just that this was too much of a line for them to be able to cross.
Yeah, well, in the very typical Japanese understated style, the foreign minister said it was an extremely regrettable that the decision was made to prohibit the takeover due to national security concerns. Mike, thank you very much. Mike Shepard there on the latest political stories. NVIDIA, we're tracking another record high yesterday. The rally extends through this morning, up 1.6%. The CEO, Jensen Huang, took the stage at the CES trade show in Las Vegas to announce new chips, software services aimed at keeping the AI darling at the top spot.
We used GeForce to enable artificial intelligence, and now artificial intelligence is revolutionizing GeForce. Everyone, today we're announcing our next generation, the RTX Blackwell family.
I want one of the jackets. I know Danny's got one. She's on review for the moment now for me. Let's get to Tom McKenzie. He is tracking this story. Tom, apart from the jacket, we'll talk more about that in a moment. I mean, this is about rolling the dice on the next big evolution in our lives. Robotics, automation in our cars, And this size of this market, the robotics market, is going to be worth $38 billion. What are they doing at NVIDIA that puts them in that leveraged position?
Yeah, you heard from the CEO, Jensen Huang, nodding to the past, but also nodding to the future, to your point. The past being that GeForce chip. Now, it's been updated. It's been underpinned now by their AI technology, the Blackwell technology. And this is a gaming chip, and it's a reminder that gaming is still a significant driver of revenues. That's where the business started. It's now about $10 billion in terms of revenues versus, what, about $100 billion for data centers? So dwarfed by data centers, but still a significant piece of that. And they obviously want to continue to build out the gaming space as well. It's a reminder of their history there. But the future is very much, as you say, at least from the perspective of Jensen Huang, within physical AI. And he described that as a multi-trillion-dollar opportunity. He's talking about autonomous vehicles. He's talking about robots, humanoid robots. He's talking about embedding AI into the physical world around that and having NVIDIA being at the beating heart of that proposition. The challenge, at least according to the analysts at Bank of America, will be ensuring that NVIDIA's software and hardware is going to be cheap enough, effective enough, and pervasive enough to make that a real business proposition, because putting a dollar number on data center sales of GPUs, AI accelerators into data centers is one thing, pretty easy to do, particularly when you have companies like Microsoft pledging to spend $80 billion on data centers. Much more difficult when you're talking about the future prospects of humanoid robots.
Elsewhere in tech, Tom, we have to talk about the remake of Meta in Trump's image, if you will. Already, we knew that Sir Nick Clegg was stepping down from the head of global affairs and naming instead a close Republican ally. Yesterday, we learned that Dana White of the UFC, who is a close Trump supporter, would also be nominated to the director of its boards. We've had Zuckerberg trying to appeal to Trump. What does this remake say about this moment, not just for Meta, but for tech as a whole, as Trump takes the White House?
Well, look, Danny, as ever, you hit the nail on the head. This wasn't on the top of the press release, of course, from Meta, but this is what this screams, doesn't it? This is a Meta that's being reshaped to align with the incoming Trump administration, given, as you say, the head of international communications, Nick Clegg, the former deputy prime minister of the UK, stepping down, being replaced by someone who has, of course, leaned and supported Republican, and now Dana White, of course, a very close and long-time supporter of President Trump. He was there campaigning during that election, of course, the CEO of UFC, now on the board. 3 new members, also a member of the family, at least the CEO of the family that has stakes in companies like Ferrari and Juventus. But that is the key takeaway, I think, is this is a company, this is Mark Zuckerberg, who is ensuring that the team at the top, the board, is more closely aligned with that incoming Trump administration. He dined with him in Mar-a-Lago, don't forget, a few weeks ago as well.
Yeah, as a lot of tech executives have done, make the pilgrimage down to Mar-a-Lago. Tom, thanks as always, Bloomberg's Tom McKenzie. By the way, don't miss our interview with the NVIDIA CEO, what Jim Bianco called the most important man for this equity market. Jensen Huang speaks to Bloomberg at 11:30 a.m. Eastern Time this morning. Let's get you set up for your trading day on this Tuesday. Richmond Fed President Tom Barkin will be speaking, delivering remarks at 8 a.m. Eastern. Then some data for you. JOLTS job openings and ISM service numbers come out at 10 a.m. And the big one, our interview with NVIDIA CEO Jensen Huang at 11:30 a.m. I love Jim Bianco putting out on X Manus that he's the most important man for this equity market. Forget Jay Powell. It's all about Jensen Huang.
Indeed, the godfather of AI, as Wedbush Securities, Dan Ives calls them. Some stocks, of course, there's NVIDIA, rallying through to a record high. It's all about robotics. That business going to be worth globally $38 billion. New products coming through. Let's see what the interview yields. Micron Technology, the shares jump. NVIDIA named the firm as the supplier of, you got it, the new GPUs. And then Uber says it's teaming up with NVIDIA, you got it, in order to accelerate the development of autonomous driving technology. So it is just this booming tech story, Danny.
Meanwhile, you have the dollar continuing to weaken despite Trump refuting that Washington Post story. It perhaps shows how one-sided this market was, with CPI moving higher in Europe.